Hey everyone, Longacres Finance here, and it's time to take a look at which dividend aristocrats are undervalued for July 2021. Seeing how June is almost over, I've decided to bring this list out a little quicker this month. For all of you that are interested to see which dividend aristocrats may be priced right in the upcoming month. As always, the undervaluation is determined using the 5-year rolling dividend yield theory method. The premise is simple. If the current dividend yield is higher than the trailing dividend yield, the stock is potentially undervalued, and vice versa. Like any valuation technique, this one is just an estimate, so keep that in mind. The prices used should be accurate through June 28th. Alright, let's get into it. There are 19 undervalued dividend aristocrats right now. We also have 7 more dividend aristocrats that are in that 5% overvalued window, which to me is a fairly valued stock. And finally, there were 11 recent dividend increases announced by dividend aristocrats during June, and we will go over those as well. Most of these increases don't go into effect till July, but I've incorporated the new dividend amounts into my spreadsheet to better show the impact they will have on valuation and each stock's dividend yield. Just a quick explanation of the spreadsheet here before we kick it off. Column A is the date, column B shows the share price, column C is the current or forward annual dividend rate, column D shows the current dividend yield, column E is the 5-year trailing dividend yield, column F shows the dividend growth, cell G61 is the ticker symbol of the company we are looking at, cell I61 shows the under or overvaluation right now, and column J shows the fair share price based on the trailing dividend yield. Down below we have the chart with the green line representing the trailing dividend yield, and the blue line representing the actual dividend yield. Starting with the smallest undervalued stock first, up first we have IBM, which is 0.97% undervalued right now. IBM offers a solid 4.52% dividend yield right now, that is one of the best dividend yields among the dividend aristocrats. Number 2 is Becton Dickinson & Company, that is 1.11% undervalued right now. The stock offers a rather low dividend yield of 1.36% right now. Number 3 is Cisco Corporation, that is 1.43% undervalued right now. Cisco offers an average dividend yield right now of 2.47%. Number 4 is Federal Realty Trust, that is 1.68% undervalued right now. Federal Realty offers a pretty good dividend yield of 3.62% right now. Number 5 is Cardinal Health, that is 2.58% undervalued right now. Cardinal pays a pretty good dividend with a current yield of 3.43%. Number 6 is 3M Company, that is 2.64% undervalued right now. 3M offers a dividend yield of 3.01% at the moment. Number 7 is Clorox, that is 3.57% undervalued right now. Clorox pays an average dividend yield right now of 2.59%. Number 8 is AbbVie, that is 3.58% undervalued right now. AbbVie offers a very good dividend yield of 4.6% right now. Number 9 is Aflac, that is 3.67% undervalued right now. Aflac pays an average dividend yield today of 2.47%. Number 10 is Hormel, that is 4.81% undervalued right now. Hormel's current dividend yield is 2.05%. That is rather low compared to some of the higher yielding aristocrats. Number 11 is Ben Franklin Resources, that is 5.4% undervalued right now. Ben Franklin currently offers a dividend yield of 3.44%. That is pretty decent entry yield for the stock. Number 12 is Kimberly-Clark Corporation, that is 6.74% undervalued right now. Kimberly-Clark pays a dividend yield of 3.46% right now. Number 13 is Exxon, that is 6.99% undervalued right now. Exxon offers a very attractive dividend yield of 5.52% right now. Number 14 is Atmos Energy, that is 11.56% undervalued right now. Atmos offers an average dividend yield of 2.53% at the moment. Number 15 is General Dynamics, that is 12.59% undervalued right now. General Dynamics offers a good dividend yield of 2.52% at the moment. Number 16 is Consolidated Edison, that is 12.78% undervalued right now. Comet pays a pretty attractive dividend yield of 4.2% currently. Number 17 is Chevron, that is 13.21% undervalued right now. Chevron pays a very attractive 5.15% dividend yield today. Number 18 is AT&T, that is 16.96% undervalued right now. AT&T will continue to be on my list of dividend aristocrats until the stock is officially removed from the Dividend Aristocrat Index. The stock currently pays a dividend yield of 7.23%, but with the upcoming dividend cut, this yield will certainly drop. And finally, number 19, and currently the most undervalued aristocrat, is Walgreens. The stock is 17.93% undervalued right now, and offers a solid 3.59% dividend yield at the moment. There you have it, the undervalued dividend aristocrats going into July 2021. Let's move on and take a look at the 7 aristocrats that are currently in fair value territory. Up first we have Chubb, that is 4.93% overvalued. Chubb pays a 2.01% dividend yield today. Number 2 is VF Corporation, that is 4.38% overvalued right now, and offers a 2.44% dividend yield. Number 3 is Realty Income, that is also 4.38% overvalued. and offers a solid 4.17% dividend yield. Number 4 is A.O. Smith Corporation, that is 3.72% overvalued right now with a dividend yield of 1.48%. Number 5 is Johnson & Johnson, that is 3.23% overvalued right now with a dividend yield of 2.59%. Number 6 is Amcor, that is 2.27% overvalued right now with a dividend yield of 4.09%. And number 7 is Pepsi, that is 0.74% overvalued with a dividend yield of 2.92%. There were a total of 11 dividend increases announced by Dividend Aristocrats during the month of June. One of them was already paid in June. Maybe you noticed it as we were going through the fairly valued stocks. 7 of the increased dividends will be paid in July, 2 in August and 1 in September. Let's go through all dividend increases to see what impact they have on valuation, and if they are in line with prior increases for the stock. The smallest dividend increase was announced by Realty Income of 0.2% that will go into effect with the July dividend payment. It may look like a small dividend increase, but keep in mind that Realty Income increases its dividend more than once per year. The last increase was around December of 2020 of 0.43%, which makes the current increase seem a bit small, but I would say that it's in line with the long-term trend. Always a pleasure to see a bump from this monthly dividend aristocrat. The small increase makes little to no impact on the valuation for the stock. Realty Income appears to be fairly valued right now. The next dividend increase announced in June came from Cardinal Health. The company announced a 1% dividend increase, which is pretty low, but in line with the last 2 dividend increases, which were also around 1%. Cardinal was already undervalued, and this increase pushes them a little further into that undervalued territory. The new dividend rate will go into effect with the July payment. The next dividend increase was announced by Chubb, and that increase was a 2.6% bump. Last year, the company hiked its dividend by 4%, but in the prior 3 years, the increases were all below 3%. Therefore, the current increase is in line with historical dividend hikes by Chubb. The new dividend rate will be paid with the July dividend and brings Chubb into fair value territory. The next dividend increase is 4.4% from Cisco. This is a rather low hike for Cisco, seeing how the past 3 dividend increases were 9, 8, and 15%. Also, the company typically increases its dividend in January. Therefore, this year's dividend hike is 6 months late. The new dividend rate will go into effect in July, and it was enough to bring the stock into undervalued territory. The next dividend increase was 4.5% from Clorox. This is in line with last year's dividend increase of 4.72%. Of course, in 2019 and 2018, the company raised its dividend by double digits, which is always a welcome sight. The new dividend rate will go into effect with the August dividend payment. Clorox was already undervalued, and this dividend hike helps push that valuation down some more. The next dividend increase was 5% from Leggett & Platt. The increase was a welcome sight, seeing how the company failed to raise its dividend last year. Too bad the company did not try to make up for that lost dividend increase with a higher dividend hike. The 5% increase is in line with historical dividend increases for Leggett & Platt. The stock remains overvalued, but the dividend hike brings them pretty close to that fair value range. The next dividend increase was 5.1% from Pepsi. The dividend hike is slightly lower than the prior year's increase of 7.1%. It does, however, bring Pepsi into low fairly value range. The next dividend increase was 7.8% from Caterpillar. Caterpillar is another company that did not increase its dividend in 2020. The 7.8% dividend hike this year is significantly lower than the last increase of almost 20% in 2019 for the company. Caterpillar remains almost 33% overvalued after this dividend increase. However, with the new dividend rate that will be paid with the July dividend, investors today can pick up shares of the company with a 2.05% dividend yield versus just 1.71% a few days ago. The next dividend increase was 8.6% from Medtronic. This dividend hike is very much in line with the last few increases from Medtronic. It boosts the dividend yield above 2% and brings the share price to almost fair value range. The next dividend increase is 32.4% from Target. This is a monster dividend increase from the retail giant. The last 4 dividend increases for Target were all around the 3% range. So this 32.4% increase is a big and very welcome surprise. The new dividend rate will roll out with the September dividend payment and brings the forward dividend yield for the stock up from 1.2% to about 1.5%. Target's share price has been on a very hot trend since 2019, with a slight slowdown during the pandemic market crash. Therefore, based on dividend yield theory and factoring in the new dividend, Target still looks almost 100% overvalued right now. I picked up shares of Target in 2017 with a 4% dividend yield, and it's still hard to believe how far the stock has come since then. And the last dividend increase was 33.3% from Lowe's, another monster dividend increase for all the loyal investors. 3 of the last 4 dividend increases for Lowe's have been in the double digits. The last increase was 9.09% in 2020. It's good to see the company sharing its profit with shareholders. The new dividend rate will be paid starting with the August dividend payment. Factoring in the new dividend rate, the forward dividend yield gets a 0.43% dividend boost, from 1.23% to 1.66%. Lowe's remains about 9% overvalued, even with the huge dividend hike, but the share price is looking much more attractive today versus a few weeks ago. Normally I would show you the returns of the Undervalued Dividend Aristocrats in these monthly updates, but seeing how June isn't over yet, I don't have final returns for the month. So the performance update for the Undervalued Dividend Aristocrats will now be included in the Dividend Aristocrat performance video that should be out in a week or two. Please leave a like and subscribe to the channel for more weekly dividend videos. Thank you for watching and see you next time.